Something is happening in Bitcoin right now. Not tomorrow, not next month, right now. And almost nobody is talking about it the way they should. Because while retail traders are distracted, while social media argues about memes and noise, the biggest players in the world are quietly moving trillions. And when whales move like this, history tells us only one thing: a massive move is coming. Let me take you back for a moment. Every major Bitcoin bull run, every explosive 5x, 10x, even 20x move was preceded by one invisible phase. No hype, no headlines, no euphoria, just silent accumulation. That phase is happening again. Over the last few weeks, on chain data has been lighting up like a warning signal. Wallets holding thousands, tens of thousands of Bitcoin have suddenly become active. Not selling, not panicking, accumulating. These aren't traders chasing candles. These are institutions, funds, entities that don't move emotionally, they move strategically. Here's what makes this moment different. In past cycles, whale accumulation happened slowly, over months. This time, the speed is abnormal. Billions in Bitcoin are being transferred off exchanges. Cold wallets are filling up. Liquidity on exchanges is drying up. And when liquidity disappears, price volatility explodes. Think about it. If fewer Bitcoins are available to buy and demand suddenly spikes, what happens next? Exactly. Price doesn't climb, it launches. Now let's talk about timing. Because markets don't move randomly, they move in cycles. Bitcoin has one of the most predictable macro structures in finance: the halving cycle. Every single time, roughly 12 to 18 months after a halving, Bitcoin enters its most aggressive expansion phase. We are entering that window now. Overlay that with something even bigger: global liquidity. Central banks are quietly shifting. Interest rate pressure is easing. Money that was locked up is preparing to flow again. And when liquidity returns to the system, Bitcoin reacts first. Always. Now combine all of this: whale accumulation accelerating, exchange supply collapsing, post halving expansion window opening, global liquidity preparing to flip. This combination has only appeared a handful of times in Bitcoin's history, and every time it changed everything. But there's one more detail most people are missing: dates. Not predictions, not hype, data driven time zones. When analysts map historical breakouts and align them with current accumulation curves, one window keeps repeating: late second quarter, bleeding into early third quarter. That's when pressure reaches a breaking point. That's when Bitcoin historically stops compressing and starts trending violently upward. This doesn't mean a straight line. There will be shakeouts, fake drops, violent volatility. That's how whales test conviction. They don't reward impatience, they punish it. This is why most people miss the 10x. Not because they weren't early, but because they weren't prepared emotionally. They panic on dips. They doubt during silence. They sell right before expansion. And then they watch. Right now, Bitcoin feels boring to many, sideways, frustrating. That's not a coincidence. That's design. Markets move the least right before they move the most. Look back at every major Bitcoin run. The weeks before the explosion felt dead, hopeless, exhausting, until suddenly it wasn't. Whales don't announce their moves, they position silently. They wait patiently. And when the move happens, It happens faster than anyone expects. This moment isn't about excitement, it's about awareness, about recognizing patterns that have repeated for over a decade. Bitcoin doesn't care about opinions, it responds to supply, demand, and liquidity. And right now, all three are aligning. History doesn't repeat exactly, but it rhymes. And this rhyme sounds very familiar. This isn't a promise. It's not hype. It's an observation. Something is building beneath the surface, quietly, relentlessly. And when it breaks, the move won't ask for permission. It never does.